Good afternoon and welcome to the MANOLETE Partners PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Stephen Cookland, CEO. Good afternoon to you, sir.
Good afternoon. Thank you very much indeed, and welcome to everyone who's joined this video. I am here today with our CFO, Mark Taverner, who I think a number of you have seen before.
Hi, everyone.
I'm Stephen Cookland, the CEO and founder of MANOLETE. Just a very brief introduction for those who don't know us. So MANOLETE is the leading operator in the UK insolvency litigation financing space, by far the number one operator in there. Insolvency cases are the only cases we do, and the reason for that is it is the one area of the law where a third party, such as MANOLETE, can actually buy the case off the insolvent company by its liquidator or via its administrator. So that gives us control of the cases, whereas if we were just funding cases, we would not be in control. The claimant would be in control. Although it's a niche market, it's a very big niche. There's been third-party reports on the sector over the last 5 or 6 years, particularly by Professor Peter Walton. So you have around 1.5 billion pounds of headline claims in a normal year, of which roughly half gets recovered in actual cash. And as Mr. Professor Walton identified, MANOLETE was a 67% market leader in the third-party funding segment of that market. But that market is still dominated by lawyers operating on a no-win, no-fee basis. But there were 2 very important legal changes in the last few years. First of all, the Jackson reforms, which made that old way of doing it, the no-win, no-fee, very uneconomic for liquidators to operate. Because as Lord Justice Jackson found, the costs of using those cases was about 200% the size of the damages. And after his reforms, you could only recover those costs out of the damages. So clearly, if this litigation was done by on behalf of creditors, if it all disappeared in fees to lawyers and premiums to insurance companies, there would be no benefit whatsoever to creditors. And creditors usually includes not only banks, but also HMRC, which is our tax money as UK residents. So as you can see at the graph, at the table at the bottom of the page there on our most recent investments, 96% of our cases we own and control. Just 4% are funded. So that 4% is usually personal bankruptcy claims. Our main area of claims are corporate claims, hence the high proportion of purchase cases. This is our track record, our vintage table. And so if we just kind of run across the columns, just so we understand. So this is by year that we've invested in the case. So as you can see, most recent years since IPO, we have increased the number of investments very substantially. Down in 2022, because the government changed the insolvency laws because of COVID, those are now back to normal. But if we take 2021, just an example, we invested in 198 cases. We've already completed 70% of those. The costs of those completed cases was 4.1 million. The total recovered was 15.8 million. Very good year. And so the total gain was 11.7. So the creditors, HMRC, etc., get 6 million. MANOLETE's profit is 5.7. We also get back our costs as well, of course. So our total take out of that would have been more like 11 million pounds. We've completed those cases in that year in 11 months, making a return on investment of 139%, 2.4 times the money that we put in, we got back, an internal rate of return of 203%. You look at all those years, we've recovered over 100 million pounds across 596 cases. And the returns are very, very stable throughout those years. So on average, we're taking 13 months to complete those cases. The return on investment, 142%, and the IRR, internal rate of return, 131%. Now, what does that number mean? Is it good or is it not very impressive? Well, through my investment banking career, the private equity market was born in the 90s in the UK, and a very attractive return on private equity and venture capital investments was 25% a year, or even 30%. So this very consistent triple-digit IRR returns, in my experience, is unheard of in the financial markets. That just summarizes the findings there. So looking at the first half of the current financial year, there are two very opposing dynamics going on at the revenue line. We have a record number of completed cases, so 95 cases were completed in the 6 months. So if one stands back and thinks about that, MANOLETE was completing 4 cases, litigation claims, every single week of that 6-month period, which is operationally a very impressive performance. I think most law firms, large and small, would be pleased to be completing almost a case a day. So for a funder, that really is quite remarkable. And that really drives realized revenues, so completed legally binding revenues, up to a record from 7.7 last year to 13.6 million this year. And I was just looking at yesterday the Peel Hunt forecasts, our brokers' forecasts for next year, FY24, and that 13.6 million figure achieved in just 6 months this year equates to the entire revenue forecast for next year that Peel Hunt have set down. We've then got 2 oddities for this year that have then brought the overall revenue down, and this is all on the unrealized revenue line, which is the output of the difference in the valuation of our unfinished cases from the year end, last year end in March, to the interim period in September, the change in value of those unrealized cases. So the reason for the decrease is twofold. Number one, we had a adverse and a very rare adverse decision in the High Court on one of our larger cases. We took the very prudent view to write that off. But since that time, the Court of Appeal has granted us leave to appeal. They haven't granted us a win of the case, but they've granted us a second chance. They've looked at the judgment and they agree it should be looked at again. So it's a sizable case. The claims that HMRC have under that case are £42 million. The accountants for the defendants admitted at least £7 million was owed, and the judge looked at data that supported around £3.5–4 million, but he awarded us just £200,000, hence the appeal. So we're feeling fairly confident that we've got good grounds to argue our case afresh at the Court of Appeal. The other factor that affected the unrealized revenues was we looked at all the other 260 odd live cases, and we thought, well, what has changed between the last year end and now? And a lot has changed. The Ukraine war, inflation at double digits, interest rates rising sharply, cost of living crisis. And so we asked our legal team afresh to look at the valuation of the cases in the light of the new current economic environment and come to valuations of those cases. And that resulted in a couple of million pared back to the portfolio, which combined with that one large case meant there was a large 5.5 million negative movement on unrealized revenues. Moving to the next slide. I think the standout point of this 6 months has been the cash generation. So last financial year, throughout the whole year, we collected in 15.6 million from our completed cases. In the first 6 months of this year, we beat that number, 15.7 million. And that generated, after all overheads, corporation tax, legal costs, payments to creditors, a net cash inflow of 4.9 million, which comfortably covered investments in all new cases and still left a couple of million over after that. So a strongly cash positive 6-month period. And that continued into the October month, again, was particularly strong. So by the time we got to the end of October into early November, that 15.7 million had risen to 19 million of cash inflow. So obviously October was very, very strong as well. So here you can see our cash inflows from settled cases over the years, but this bar here for the FY23 is for just 7 months compared to all the annual figures of the previous years. So very proud to show the cash generation engine of Manolete really coming to the fore now. So as I say, these are the first results since we were released from the suspension of many insolvency laws during COVID to protect employment, understandably, to protect the SME and large sector economy of the UK. But we've just started to emerge from that. As you can see, with those suspension of the insolvency laws in place, there was a dramatic decrease in the number of insolvencies, exactly what the government was trying to achieve. But since those insolvency rules were re-established back to normal, there's been a very strong recovery in the number of insolvencies. So from a low point of about 700, we're back up to some months of 2,000, 1,800, 1,700, so double, triple where we were last year. And that augurs very well for our future numbers, because there's a time delay that comes into effect. These are the companies going into insolvency. A liquidator appointed. They need 6, 7, 8, 9 months, sometimes sooner, sometimes longer, to investigate the claims in the company, then to approach us to finance those claims. So this augurs well. This is a very good leading indicator of how our business should develop over the months and years to come. And here it is, impacting our new case inquiries. So here we've got the period of where the government suppressed the insolvency laws, a sharp decline in our case inquiries, and then as the laws were relaxed and brought back to normal, we are now above the pre-COVID period for numbers of inquiries, which is great to see. And again, time lag factor comes in, then signing the cases, because the cases come to us once the inquiry comes in. We need to do our analysis, make the offer to the liquidator, maybe negotiate the offer and then sign the case. So a flatter increase of cases. But again, these should start to take the shape of the market that we looked at 2 slides ago. And this, I thought would be helpful to put those 3 graphs on a single slide. So you can see the market increasing sharply because the inquiries lag behind the market by about 6 months or so. That's a shallower curve. And because the new case investments, yet again, a time lagged, that is yet again a shallower curve. The thing that's driving all of this is this curve, the market. We then move on to the Barclays bounce back loan pilot, and you can see there the impact it had on our new case inquiries for October. And this is just a very small sample of Barclays cases. They have thousands of these cases that are now behind in paying back their bounce back loans. So this was just the relatively small pilot study, but in terms of Manolete's numbers, it is highly significant. So what was the bounce back loan program? This was the government's response to COVID-19. So between June 2020 and September 2020, about £50 billion was released by the Treasury through banking financial institutions in the UK to be loaned to SME businesses in the UK. Very few checks were done. A lot of it was self-certified. You told the bank what your revenue was, and you got up to £50,000, and the money was put out very, very quickly indeed. You will have seen that people like Lord Agnew, who was a business minister, resigned because he thought the checks were too lax and wide-scale fraud was perpetrated in this area. And no one denies that. The estimates of that fraud are at the low end are about £1 billion, at the high end more like £10 billion, our working assumption is more like the middle range for about 4 to 5 billion, even if it's a low end, with Manolete getting an activity even on the 1 billion size of things are numbers that are very large compared to our normal levels of addressable market. So Barclays approached us several months ago. We've been working with them very closely, with the Insolvency Service, with the British Business Bank, and the British Business Bank approved a pilot scheme of 120 companies who were behind their payments, where Barclays suspected fraud had been perpetrated. As I say, out of thousands of possible companies they could have chosen, and we entered into a pilot scheme. Those companies were petitioned for compulsory liquidation through the courts. Immediately, 18 of those companies settled their bounce back loan in full immediately, generating hundreds of thousands of pounds for the Treasury just on the pilot, and covered all of the costs of the pilot and some. The 102 companies have now been compulsory liquidated. They're with the official receiver. Those cases will then very largely be handed over to a private IP firm that can handle volumes like this. And then the vast majority of the cases will be assigned over to Manolete at a cost of 5,500 to Manolete per case, which will underwrite the costs effectively of the private liquidator's work. Then the recovery will be split. Once Manolete exits 5,500 back, the remainder is split 50-50 with Manolete. There is no cap on that at all. Manolete has a unique solution for this because, as we will all know from dealing with the legal profession, £50,000 claim in the hands of a lawyer with 80 insurance, the costs would gobble up that 50,000 within just a few months of working on that claim. We will be handling this very straightforward legal work in-house on almost all of these cases, thus maximising the profit for Manolete shareholders and maximising return for the Treasury. I won't spend too much time on the slide. I've used it before, but many of you will have seen the predictions, even by the government, of now a 2-year-long recession ahead of us, which we believe will, and many others believe, will lead to heightened levels of insolvency cases over the foreseeable future. A quick word on the cartel cases. We're making a very interesting point here. Just a reminder. These are about the fact that the European Commission found that truck manufacturers had been operating a price-fixing cartel between 1997 and 2011 across Europe, including the UK. The manufacturers received a record fine from the European Commission of €3 billion. They are liable. There is no question that they have to pay for the damage that was done to all their customers. Of those, Manolete bought the claims of 22 companies that happened to have gone bust. 2 of them were particularly large: CityLink, the famous courier company, and Comet, the famous high street retailing business that actually had its own large fleet of trucks bought from these manufacturers. So we've got 22 of these claims. The 2 lead test cases are being run by British Telecom and Royal Mail. So all other claims have been stayed. We've served our cases on the defendants, which have been accepted. But the judge has said, please wait for me to give my judgment on British Telecom and Royal Mail before progressing your cases. That suits us fine, because it doesn't cost us any money while we wait to see what the judge says. Now, those trials have completed, and our KC, King's Counsel, we have to call them now rather than Queen's Counsel, has advised us that we should get the judgment around about Christmas time this year. And that'll make very interesting reading and be highly instructive as to the valuation of the claims. At the moment, they're in our books at 13.2 million, including the costs we've spent on these cases. And that valuation has been very much derived externally by a specialist cartel claim valuation company called Fideres, who've set a range, and we've gone under their low end of their range for setting our valuation of our cases. I'll hand over to Mark Taverner, our CFO.
Right, if I start off with the trading performance for the 6 months to 30th September, if everyone looks at the right-hand column, that's the 6 months as shown there. We need to look at realised revenue and unrealised revenue separately, because as Stephen mentioned earlier, they're two very different dynamics. Realised revenue was generated from 95 case completions. This is the actual settlement amount for those cases in the period, and that was a record number for the business in a 6-month period. Unrealised revenue is the movement in the fair value investments held on the balance sheet, and we'll unpick that minus 8.1 million number on the next slide. So those two things moving in different directions. Just moving down the profit and loss, administration expenses increased by 0.8 million to 3.1 as a result of an increase in bad debt expense. We always prudently review our debtors, and a small number of cases we were more concerned about for recoverability, so we wrote those off. So we reported an EBIT operating loss of 5.3 million for the 6-month period. Just also to note, the two graphs on the page are quite small. You might need to strain to see those, but the gross settlement value for each 6-month period, you see how that's increased in the recent period, and also the actual number of case completions. Again, there's a nice upward trend there up to this 6-month period. So I'll just go over the page. So this is unpicking the 8.1 million fair value movement. There are essentially three movements that are posted through unrealised revenue, and they're all movements in the investment balance on the balance sheet. So addition of new cases is a positive that gets posted here. Removal of completions is a negative, and because we completed a lot of cases, that's a large negative coming out. Now, of course, that negative is replaced by the actual completion in realised revenue, which is usually a higher number because we've completed it at above our fair value valuation. And also an adjustment in value in the fair value for the existing cases. And we've separately shown the cartel cases that Stephen touched on earlier. So we've taken a 1 million uplift in valuation of those cartel cases, just to recognise that they've reached the milestone of us tabling our cases with the defendants. So I'll just go on to the next page. Again, if you look at the right-hand side column, you'll see the balance sheet for the 30th September 2022. Just a few key numbers to pull out. The long-term investment in cases, 13.2 million, is the valuation of the cartel cases. The valuation of all other cases are considered short-term because we turn them over typically in 12 months, is the 22.9 investment in cases further down. Trade receivables were very stable at 22.3 million compared to 22 million in the previous September, and we held cash on the balance sheet of 0.4 million. We'd drawn down a net 9.8 million of our HSBC loan facility, and we actually repaid 3.5 million of the loan during the period. And I'll touch on the loan in a little bit more detail in a later slide. Now, the impact of completing so many cases in the 6-month period is that we've had a very strong cash flow generation for the period. Again, if you look at the right-hand side column, you'll see that we had gross cash generated of 15.7 million, which again is a record for us in a 6-month period. After paying the IP share and external legal costs, that's a positive 7.6 million to Manolete. We then invested 2.8 million in new cases and legal costs on existing cases. We still had a net positive cash generation of 4.8 million. And before financing, you see there's a net cash positive of 1.9 million after overheads. We then used that cash to repay some of our borrowings. Turning the slide again, just a couple of cash analysis slides. I won't dwell on these as Stephen's already covered them. Gross cash receipts for completed cases. You can see each half year a very strong increasing trend. The cash collection profile, again, on the graph on the left-hand side shows annual cash receipts. And the very last column on the left-hand side is obviously only 6 months of FY23 has taken place. So you'll see that in 6 months we've collected slightly more cash than we did in the whole of the previous year. The table on the right-hand side shows how the cash, the 15.7 million of cash that we've collected, in which year those cases completed. So it shows that some cases from previous years are continuing to pay cash into us, as we often collect cash through repayment schedules. So there's a nice kind of latency cash collection profile there. Just touching on aging of receivables, we showed the aging in two ways: by settlement date on the left-hand side and by due date on the right-hand side. Now, by settlement date, because as I just mentioned, many of our debtors pay according to payment schedules, you would expect there to be a phased some older debtors there. However, when you adjust for the payment schedule and you look by due date, you see the vast majority of our debtors are not yet due, and there's hardly any aged debtors there at all. Just to touch on the HSBC loan, those of you who have heard our presentations before will know the story of HSBC's support to the business, starting in January 2018 with a £10 million loan. This was increased to 20 million facility at the IPO, increased further to 25 million in June 21. We have an uncommitted accordion of a further 10 million available if we wanted to apply for that, so a 35 million package together. The interest cost is a maximum of 2.9% above SONIA. SONIA is a base rate measure. Manolete's recently extended the loan period to June 2025 as well. And I think I'll hand back to you now, Stephen, for the summary.
Capture the summary points. These are the first set of accounts where you see the business's KPIs now strongly emerging and improving from the extended period where the government had suppressed the UK insolvency market. The first cases that came through after the restrictions were lifted, certainly with the smaller kind of zombie companies, as they're called by the financial press, what we've certainly seen in the last 2-3 months is the much bigger claims, 6-figure claims, 7-figure claims, even 8-figure claims coming through as inquiries to us. So much more normal spread of cases now coming through the pipeline. October, as you saw, was very strong with the BBL cases, and November has started very strongly indeed, maybe the best we've seen for maybe 3 years. We take a very prudent stance on that big case where we had the poor first instance judgment, which has now gone to the Court of Appeal. So we've taken a very prudent position on that now, obviously, and we are hopeful that we will ultimately get a very good result on that case. And of course, we've taken this one-off reappraisal of the book of cases to reflect on what's happened since the last year end. And I think that's appropriate for any asset management company of any description. Record number of cases, 95 in the last 6-month period, which is 4 cases a week, which from an operational business traction standpoint is I think very impressive. That led to a record number of realized revenues, 77% higher than last year at 13.6 million. And I'll repeat again, that equals the entirety of Peel Hunt's forecast for next year in total revenues. So that's jolly good. Cash generation, as Mark and I have obviously stressed, is exceptional at 19 million year to date. So that's 7 months. Mark's last graph was just at the half year. I brought that up to date there. BT and CityLink trials now done on the cartel cases. We await the decision. New covenant package being done with HSBC. That should be finalised in the next few weeks. And then the BBL opportunity, both with Barclays, and of course, we're engaged with all the other leading BBL lenders. We are in active discussions with all of the large ones and a number of the challenger banks as well. They're all looking at the pilot. They're all waiting for the full results of the pilot. So come the end of the financial year would be the window for us to be engaging and hopefully running out programs with them. There can be no guarantee that that will happen, but we believe the data will speak for itself. That's it. We will now turn to Q&A.
Yes.
So Sorry.
Stephen, Mark, thank you very much for your for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions throughout today's presentation. And if I could just ask you to read out those questions and give responses where it's appropriate to do so, I'll pick up from you both at the end.
Sure. So I'll just read down from the top. So Quentin B, thank you for your questions. He says it's fantastic to see the potential ramp up of the business for Manolete, but given it has high people-based costs, I wonder what provision there is for reducing those costs as and when the volume of insolvencies reduces. That's a very fair question. Quentin, I think we're in for a very good run for a number of years now. I think this BBL program itself, as the government has said, we're just at the start of the recovery process. There are potentially thousands of cases. I mean, the potential fraud here is, as I said, between 1 and 5 billion across a huge number of companies. And there's only so many that the courts have restricted us to 50 a day on this. And then there's only so many the insolvency service can manage. There's only so many the banks will want to finance going through that compulsory process at any one stage. So I expect this to run for a number of years and have and build up a very predictable earnings stream on the back of that, if we get the go-ahead on those cases, of course. The core business, I think we're only just seeing the emergence out of the massive multi-hundred billion support that was given to the UK economy by the government. That has obviously all been stopped now, the furlough schemes, etc. So the cash reserves and the forecast number of insolvencies is forecast to be very high. That will persist for a number of periods. The government itself, of course, the Prime Minister has said we're in for a 2-year recession, which is, to my memory, that's the longest recession I can recall. So I think, yes, increased staff numbers for the core business. The BBL team will be on much more short rolling contracts. These are much more junior level, much cheaper staff going into there. So that wouldn't be a big restructuring cost at all if and when we have to wind that down. Quentin then also asked, the BBL recovery program looks very exciting. What steps are you taking to make this process as streamlined and efficient as possible? And what capacity will you have to expand? At Manolete, again, very good questions. So streamlining, we have set up a very streamlined process for assessing the net worth of this. In fact, the creditor banks are pre-vetting a lot of that for us before it even comes to the compulsory liquidation process. So that is something that we don't usually have the benefit of. Then all the letters that go out to the companies have been standardized. One literally needs to change 2 or 3 fields for each one, so we think we can manage very large quantities at any one time. And capacity, well, we think the current capacity Manolete can handle in terms of BBL, several hundred BBL cases a year. If we get into 4 figures and beyond, this is where our plan A comes in with this separate team outside London that will be assembled. But we'll have plenty of time to put that together as the data runs through. Damien says, exciting news on Barclays pilot and BBL. How long does the pilot run? How many other lenders are you in dialogue with for pilots? So this pilot is started. It's in full flow, as I've described. We think the results should be coming in from our end of it by around March, April, May, June next year. We'll be signing these cases up much earlier, December, January, so December 2022 and January 23. Other lenders, other pilots, well, they're all looking at this pilot, Damien. They all, I've learned a whole new world. So there's these forums that all these banks sit around every week, and is chaired in turn by various members of various banks. And this is one of the hot topics that they're all looking at. So there's no need to replicate the pilot. Everyone's looking at the Barclays pilot, and so far the results have been stunning. We are.
Stephen, is it worth saying that for how long does the pilot run? It's not necessarily, it's not a length of time. It's more a specific number of cases and however long it takes us to process those. So
yeah, but I think we'll have meaningful data, as I say, by May, June next year. We should have got through a number of them. We've done a whole bunch of BBL cases just in our normal course of work, and they tend to resolve in about 4 to 5 months, so much quicker even than our normal work. So Jason asks, why have you written down, this could be one for you, Mark, why have you written down your expectations on your current cases? Is it because the value of the assets you recover has fallen, that the insolvent parties are poorer, or something else? Have you ever written down cases before for macro reasons rather than specific individual circumstances? So hopefully I've explained, if we were sat opposite a theoretical director, Jason, who owed 300,000, and we were having that settlement discussion in March on that case, so before Ukraine, before inflation, before energy prices, we and he might be willing to settle that for maybe 200,000. If we were running that exact same scenario now, we're probably talking about a number at about 150,000, 170,000. And it was that kind of thinking that we asked the legal team to go through in reassessing the value of the cases. So really quite simple, what can he afford to pay us? And realistically, what can he pay us?
It's worth adding that this has been a kind of bottom-up process, speaking to each of the legal team members about each of their cases and what they thought the recovery was. So you've kind of got the macroeconomic factors and the feedback from the team as well.
From the coalface, exactly. Yeah. And we're hoping that this is, a one-off adjustment, just because so much happened in this 6-month period. We thought it was definitely an exercise worth doing. But absent, World War III or a new pandemic, we don't see that this needs to be repeated, because these cases are over very quickly at Manolete. So the new cases being taken on are completely cognizant of the current economic environment and the forecasts for the next 2-3 years. So we feel that those mark-to-markets are very much on the conservative side on the new cases. Another quick one from Jason. Have you seen any evidence that liquidators are prepared to accept lower bids because of the macro background? It's actually a very clever question. So while the insolvency market was suppressed by the government during COVID, it not only suppressed our numbers, but suppressed the cash flow for insolvency practitioners. So we've certainly seen that they are much more willing to sell cases. Sell cases to us, not necessarily for a lower number. We're not looking to penny pinch. We know that usually their costs accrued are around the kind of 5,000 level on a typical case. So that's usually where we're pitching. But that could be covering a case that's where the claim values are £500,000, £1 million. On really big cases, we're offering more like £50,000, and then a 50-50 average split. Mark L asks, are the cases in the Barclays pilot chosen at random, or are they the most egregious examples? No, they're not the most egregious examples. But it'd be impossible to tell whether they were or not, is the truth of it. They just had a common factor that the companies weren't repaying their BBL, and there was evidence that the directors had pocketed the money personally. That's who we're after. Jason, another one from Jason. What do you think is the best way to value your business? Earnings multiple obviously don't work. Is it price to book? We think it's earnings multiple, Jason, because unlike many other asset managers, we are completing cases so quickly. We're turning over the capital, recycling capital so fast. As I said, we're completing almost a case a day. We're getting new referrals in. Sometimes 2, 3, 4 new cases a day. So for us, it's much more operational business rather than sit back, hands-off asset management business, is our view. But people could look at cash flows and DCF and also that's your job to value us. Paul asks, is possible to provide some guidance on revenue and EBIT target for H2 2003, also for the next 24. Paul, with the greatest respect in the world, we're not going to get into profit forecasts on this platform, if that's okay. Unsure if permitted to disclose. Paul, you're obviously asking all the difficult questions. So unsure if permitted to disclose, but what percentage success did Casey opine on appeal case outcome? Well, Paul, what I will say, I don't think we did ask for a percentage, but what I will say is that this Casey, for the first time in his career, when the initial judgment was handed down, rather than just correcting typos, which is his job for the judge, he actually said for the first time in his career to the judge, would you like to rethink your conclusion? That went down as well as you can imagine. He didn't rethink his conclusion, but it just showed you what our Casey thought of the initial verdict on the case. And we weren't surprised, but it's a high bar to get the Court of Appeal to agree to review a case. So we're back in the game. MS asks, I'm wondering how much spare capacity, very good question, your legal team currently has versus current and potential future demand, number of cases, and what the lead time would be to add to the team if demand to increase more strongly than expected. So we've got currently, I think, 14 lawyers, or very soon to have 14 lawyers in the business, MS. So any one of those can handle 30 to 40 cases at any one time. So that gives us capacity for about 400, 500 live cases at any one time. At the moment, we're getting towards 300 live cases. So we've got plenty of capacity. There's a lot of business development work being done now. Other people can meet again, so people aren't sitting on their hands by any stretch. But if people are absolutely flat out working cases, we think we can handle between 400 and 500, which is in the scheme. We signed up 83, Mark, I think, in the first half.
Yes, absolutely, yeah.
260 odd live, so we've got plenty for the next leg up of cases. The lead time for new lawyers, that is a critical constraint. So at the more senior end, you are looking at 3 to 6 months. So we are often looking in advance. We're almost always interviewing people to make sure we can react quickly. But on the BBL staff up, if we need to go to 3, 4, 5, 10, maybe more people on the BBL department, because we're much more junior and more newly qualified lawyers, so their lead time will be more like weeks than months. A lot of questions here. Damien asks, in the first 6 weeks of H2, can you give some insights into case inquiry numbers and cases taken on? Absolutely fine. So I've done the October numbers in my presentation, so I've answered that. November has been very strong. We're already in the first 10 days, we've got in 26 cases with headline values of over 20 million. And it's the kind of thing we're on top of almost every hour of the day. That's how I can pick the numbers off the top of my sleeve there. So if that's in the first 10 days of November, if that run rate was to continue, we would be looking at maybe 70 odd cases, inquiries for this month, which is astonishing. And that's no BBL cases included in those numbers. These are just run-of-the-mill cases. Cases taken on, as we've always said, that there's a time lag there. So these are more old money. So at 14, 15, pre-COVID, we were more like 17, 18, 19, 20. So we're edging back towards that. In the depths of COVID, we were like 7 cases a month, 10 a month. So we're getting back to where we were when this business had an EBIT of 9.5 million. Mark H asks, do you consider it appropriate that Mr. Baster still sits as a High Court judge whilst being a director of Mano Swindon Football Club? Your own video a few weeks ago states that he promotes Mano as the solution that all liquidators should use as first choice. Well, Stephen Baster he's a deputy High Court judge now. He's no longer in charge of the insolvency and bankruptcy courts. He sits very seldom now. He retired from the bench. They've asked him to stay on in a very minor role. His honest view is that this is the way that all insolvency litigation should be done. He's been in the market. He was a solicitor before he was a judge. And that is his honest view. And by all means, pick up the phone, talk to him. He's the luckiest guy in the world. He is also the most ethical operator in the world. If at any stage he thought there was a conflict of interest on any of our cases or any case he was sitting on, he would recuse himself immediately, Mark. Moving on to the next question. Jason, where can we see PL Hunt's forecast? the answers in the question, Peel Hunt, we can't hand them out, all these MiFID II things. So please do ask them. Gershon, I think this is the last question that I can see.
Andrew Shepherd-Brown is the contact at Peel Hunt.
Oh yes, Andrew Shepherd-Brown. Yeah. Are there other banks that Barclays that you could partner with on BBLs? Absolutely right, Gershon. So as I said in the presentation, we are talking to all the big BBL lenders. They're all watching the Barclays pilot, and the Barclays pilot is being shared by Barclays with all of them. And we are engaging with them to explain the process and the legalities and the cash flows of how the pilot works with in one-to-one meetings with those banks. So fingers crossed. And this is the key thing, that they do the right thing. Yes, these were government guaranteed loans, that the bank is not on the hook, but this is taxpayer money. And the right thing must be done to get as much money back as possible, particularly in these straitened times. I think that's all the questions, unless I've missed anything. Back to you, Mr. Compere.
Stephen, Mark, thank you very much. I think you actually managed to address every single question from investors.
Yeah.
And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors, just to provide you with their feedback, which I know is particularly important to the company, Stephen, could I just ask for a few closing comments?
Yes, thanks very much indeed. And thank you all for spending time and your support for the company. I'd say particularly after the past 2 years where Stephen Baster actually described the legislation that the government passed to suppress insolvency as almost wartime-like legislation to override the Insolvency Act 1986 to protect people's jobs, to protect families. And we don't argue with that at all. That did delay a huge number of insolvencies. Those are coming through now. It's actually very, very important. If Britain is to be fit in a post-Brexit era, then poorly performing companies need to go through insolvency. Those assets and those customer lists need to go to the fitter, better companies. And this is how capitalism works. And no one's invented a better system to my mind. So we're all playing, I think, a very important role. The money we recover, half of it goes back to HMRC. If it wasn't MANOLETE behind these cases, nothing would go back to HMRC. And we look forward to a very busy year. I thank you for your support, and we look forward to the journey with you. Thank you very much indeed.
Thank you.
Stephen, Mark, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MANOLETE Partners PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.